You're probably juggling a million things right now. I mean, maybe you're on your commute, stuck in traffic, or just, grabbing a quick coffee between back-to-back meetings.
Just trying to keep your head above water.
Right, exactly. But you're here right now because you want to understand the mechanics behind one of the most fascinating, contradictory, and frankly mind-bending business stories unfolding right now.
It really is an incredible narrative.
It is. So, okay, let's unpack this. The mission of this deep dive is to make sense of this massive stack of financial reports, market analyses, and stock market stories we've gathered. And it's all centered around an Indian edtech giant called Physicswallah Limited, or PWL for short.
And the stakes here are absolutely massive.
Yeah, let me just set the stage for you. We are looking at a company that literally started as a YouTube channel.
Back in 2016, right?
Yeah, 2016. And from those digital beginnings, it skyrocketed to a $2.8 billion valuation. It became a unicorn.
Which is no small feat in the edtech space.
Not at all. Fast forward to November 2025, and they go public. They raise a staggering 3,480 crore in their IPO, and they boast this army of over 119 million social media followers.
And this is the big plot twist.
Right, the stock is struggling. Heavily.
Exactly. If you look at the data, the stock is down 37% year to date.
Down 37%. How does a company with that much momentum, that much capital, and an audience larger than the population of most countries just find itself getting absolutely punished by the public markets?
Well, if we connect this to the bigger picture, the reason you, the listener, need to care about this isn't just because it's a quirky story about one education company.
Right.
It's really a real-time, high-stakes masterclass. It's about that tension between hypergrowth, massive total addressable market,
That TAM, yeah.
and the really painful reality of achieving actual profitability. It's a case study on what happens when a digital darling hits the physical world.
When a company born on the internet just crashes headfirst into reality.
Precisely. It's atoms versus bytes. So today, we're going to map out this deep dive. We'll explore what they actually sell, the massive market they're trying to capture, and their unique and incredibly expensive hybrid business model.
We're going to get into the cold, hard financials, too.
Yes, the numbers that are making institutional investors sweat. And finally, the very real existential threats they face from AI and government regulation.
I really want to pause on that atoms versus bytes concept, because I think that's the perfect lens for this whole deep dive.
It frames the entire paradox.
It does. But before we get into the heavy financials and the real estate, we need to understand the foundations, because 119 million followers don't just magically appear.
No, they certainly do not.
Right. So break down for us what PWL is actually selling. They have 4.46 million paid users as of the 2025 data.
Right.
What is the core engine here?
So at its core, PWL operates across 13 different education categories.
Oh, okay.
But the absolute beating heart of their business, the thing that built the brand, is test preparation for the hyper-competitive Indian entrance exams.
Right, the acronyms.
Exactly. You'll hear these constantly. The JEE for engineering, the NEET for medical schools, and the UPSC for the civil services.
And for anyone listening who isn't familiar with this system, these aren't just like standard SATs.
Oh, not even close. These are massive societal bottlenecks. They're golden tickets to upward mobility. The acceptance rates for places like the IITs, the Indian Institutes of Technology, are fractions of a single percent.
The pressure has to be suffocating.
It is. And because of that, the demand for high-quality prep is completely inelastic.
Meaning parents will pay basically whatever it takes.
They will sacrifice almost anything to give their kids an edge.
But the sources say they're also moving beyond just teenagers, right? They're doing this big pivot.
Yeah, they're moving aggressively into upskilling.
What does that look like?
So they're offering courses in data science, banking, finance, software development. And what's fascinating here is the sheer scale of the demographic pressure driving this.
Let's talk about that, TAM, the total addressable market. How big is the ocean they're fishing in?
Well, the EdTech TAM for test prep and upskilling in India is estimated at $5 to $10 billion annually as of 2025.
5 to 10 billion.
Or roughly 40,000 to 80,000 crore.
That's just a staggering amount of money.
And if you break down the math, it makes sense. You have 15 to 20 million aspirants for JEE and NEET alone, plus another 5 to 10 million for UPSC.
Okay, so that's like 30 million people just taking tests.
Right. And then in the upskilling market, you have 20 to 40 million working-age youth people in their 20s and early 30s seeking certifications.
Why so many? Are degrees not enough?
No, and the reports are pretty stark about this. There's a massive skill mismatch. Some reports suggest 80% of Indian graduates are unemployable without extra skills.
Wow, 80%.
Yeah. So they need Python, they need financial modeling, they need practical skills.
I mean, think about the last time you tried to learn a new complex skill, just for your job. Now imagine your entire career trajectory depends on one test or one certificate.
And historically, getting that help was incredibly expensive.
Right. Legacy coaching hubs, places like Coda, they charge what, 1 to euro a year?
Exactly. Which completely prices out the vast majority of the population.
Uh,
The market assumption was that only maybe 10 to 20% of people had the willingness to pay for structured prep.
Gusto is just for the wealthy.
It was. And that is PWL's initial wedge into the market. Their focus was pure affordability.
Dropping the price float.
Drastically. Down to the 3,000 to 5,000 range, they took a premium service and democratized it. That's how they captured those 4.46 million paid users.
And their engagement metrics are just insane.
2.70 million daily active users.
DAUs, not monthly, daily.
Daily. And other data points suggest it peaks at 3.4 million during exam season, averaging 106 minutes per user per day.
106 minutes. That's almost 2 hours of active, focused studying on an app. That is incredibly sticky. But even with all that, they've barely scratched the surface, haven't they?
Barely. EdTech only serves less than 10 to 15% of this TAM. PWL itself only has less than a 1 or 2% share.
Meaning 85 to 90% of the market is entirely untapped.
Completely untapped. Mostly sitting in Tier 2, Tier 3 cities and rural areas. It's a durable $10 to $20 billion opportunity by 2030.
If they can reach them.
Exactly.
And here's where it gets really interesting. Because to reach them, PWL isn't just relying on their app. They're not just buying server space. They are building a massive real estate operation.
They are pouring concrete.
Right. Talk about the hybrid strategy.
So as of June 2025, they have 303 offline physical centers.
303.
And they aren't stopping. They're scaling to 314 in the first half of FY26 and targeting 318 by December 2025. This includes brands like PW Vidyapith and PW Pathshala.
And the growth rate on that.
From FY23 to FY25, this physical footprint grew at a 165.9% compound annual growth rate.
Okay, I have to jump in here. That is an absolute logistical nightmare.
There's immense friction.
Right. Like imagine opening hundreds of commercial real estate locations across 109 different Indian cities. You have to hire janitors, deal with local building codes, HVAC systems. Why on earth would a tech company take that on?
Because offline distribution is their competitive advantage. It's their primary moat.
A physical moat?
Yes. Think about it. Physical expansion is incredibly hard to copy. It requires massive capital, localized real estate management, local staffing.
Whereas an app?
An app can be cloned over a weekend. If you look at their online segment, despite having 3.22 million online enrollments in H1 FY26, the sources explicitly note there are no concrete differentiators for PWL Online.
No network effects.
No proven network effects, no high switching costs, no unique tech advantages over their well-funded peers. If a student wants to delete the PWL app and download Byju's or Unacademy, it takes 10 seconds.
The barrier to exit is zero.
Exactly zero. So to create a barrier, they have to physically own the ground.
They're locking them in with real estate.
Right, and they're doubling down. Just look at December 2025. They acquired land in Ranchi. They aren't just leasing, they're buying land.
And the South India expansion, too.
Yes, the 50% stake in Xylem back in 2023. They are dedicating massive physical capex to capture those Tier 2 and Tier 3 cities.
But this brings us to the big disconnect, the stock market's reaction.
It's a brutal reaction.
Yeah, I mean, they reported 34% year-over-year quarterly revenue growth in December 2025. Yet the stock is sitting at all-time lows, like around 81 to 83, stagnant one-year returns in a booming broader market.
It signals deep skepticism from institutional investors.
Why? If the moat is working.
Because institutional investors who hold about 25% of the stock, they're looking at the true depth and cost of this moat. It's incredibly expensive to run physical schools.
Which transitions us perfectly to the money. Let's dissect the financial engine, because
Yeah.
this unit economic story is just wild. Break down the Q3 FY26 numbers for us.
All right, Q3 FY26, which ended December 31st, 2025, revenue was INR 1,082 crore, up 34% year over year.
Strong top line.
Very strong. And for the 9 months, revenue hit INR 2,980 crore. But what's really telling is the split. It's incredibly balanced. 51% online, 46% offline,
Almost a perfect 50-50 split.
with a tiny bit of income from study materials and interest.
But top line is vanity, bottom line is sanity. Let's talk about the profitability paradox.
This is where it gets rocky. Historically, they've had massive losses. In FY24, their profit after tax, their PAT, was negative 1,131 crore.
1,000 crore loss.
Yes, they improved slightly to negative euro 243 crore in FY25.
But wait, didn't they just report a profit?
They did. Q3 FY26 standalone showed a net profit of 102 crore.
Okay, so this raises a really important question. How does a company with 119 million social media followers lose money in the first place?
We have to dissect the cost structure. When you build 300 schools, your costs fundamentally change. Employee benefits have consumed 50% of their expenses.
Half their money goes to payroll.
Exactly. You have thousands of human teachers.
Yeah.
Then depreciation and amortization.
The cost of the real estate and desks degrading.
Right, that's about 12%. And direct operational expenses take another 12%.
So that's the heavy offline burden. But where are they saving money? Because there's a miracle hidden in these sheets.
The zero CAC miracle. CAC being customer acquisition cost. Their marketing spend is impressively, almost unbelievably low.
Less than 10%, right?
Yeah, around 8 to 8.5% of FY26 revenue.
Which is unheard of for a company growing at 30+%. Most consumer tech companies are burning half their cash, paying Google and Meta for ads.
But PWL has an organic community funnel. They pull students in through free YouTube videos, move them to the cheap app, and upsell them to the physical centers.
So their CAC is virtually zero.
Exactly. They just post a video and millions see it.
So think about that as an investor. You have a company growing top line at a massive clip, zero marketing costs, yet until this last quarter, they were bleeding cash. It just shows you how expensive it is to pay humans to teach humans in physical rooms.
It eats all the digital margin.
But they have a safety net, don't they? The IPO cash?
A massive one. They have a treasury of 5,054 crore.
That's a mountain of cash.
It is. They made 65 crore in just interest income in Q3 alone. But the market isn't just looking at the cash, they're looking at the valuation. They have a negative PE ratio.
Negative 151.16, the data says.
Right. And a historical average annual earnings decline of 20% over the last 5 years.
So the market is saying, show me the money.
Yes. They want to see sustainable profits, not just expansion fueled by IPO cash.
Which brings us to the people holding the purse strings. Part 4. Who is driving this ship and where are they going? Let's talk leadership.
It all revolves around Alec Pandey, founder and CEO. He owns 36.15% of the shares.
Which is worth around 94.90 billion on paper.
He is deeply incentivized, and he's backed by co-founder Pratik Boob and CFO Amit Sachdeva.
But there are some serious governance red flags in the sources.
Very serious. Let's look at the board. There's 6 members, but the data characterizes them as highly inexperienced for a public company of this scale.
The average board tenure is only 2.7 years.
And the management average is just 1 year.
1 year. That means the people running this multi-billion-dollar operation haven't even been through a full business cycle together.
And it shows in how they communicate with the market. The sources explicitly note there is no forward-looking guidance provided to investors.
No guidance on capital allocation.
No guidance on capital allocation, no dividend policy, no market share targets.
That drives Wall Street and Dalal Street crazy.
Absolutely. Markets hate uncertainty.
But if they aren't telling us their strategy, we can look at what they're actually buying, this ecosystem expansion growth vector.
They're acquiring aggressively. They bought Freeco for doubt solving. They bought iNeuron for publishing and upskilling.
They even signed an MOU for a University of Innovation with the Andhra Pradesh government in December 2024.
Blurring the lines between coaching and formal higher education.
But all of this, the acquisitions, the centers, the apps, it all rests on one pair of shoulders, key person risk.
It is their biggest unquantifiable vulnerability. PWL's brand is entirely intertwined with Alok Pandey's charisma. If he steps back or loses his touch, the forces suggest it could instantly cause a 10 to 20% drop in enrollments.
And there's no clear succession plan.
None publicly identified.
So what does this all mean? We're entering the danger zone, they're walking a tightrope, and the existential risks to this thesis are huge. Let's detail risk 1, offline compliance.
Running 303 physical centers across different Indian states exposes you to a labyrinth of labor laws and building codes.
And we saw a red flag on this front recently.
Yes. In November 2023, PWL laid off 150 employees.
About 0.8% of the workforce, which sounds small.
But in the context of a hyperscaling company that is actively opening centers, it signals operational friction.
It means they miscalculated demand or certain centers weren't viable. Scaling physical assets is hard,
Very hard.
but the physical risks pale in comparison to the digital threat. Let's talk about the 2 to 3 year ticking clock of AI.
The technology disruption risk. Right now, PWL relies heavily on personalized doubt solving. They have their smart doubt engine and AI guru.
Things students pay a premium for.
Exactly. But the imminent threat is that within 2 to 3 years, advanced open-source LLMs will reliably solve JE and NEAT physics and chemistry problems.
Flawlessly. And for free.
Yes. When ChatGPT can tutor a student perfectly, adjusting its explanation 10 different ways until the student gets it, PWL's paid doubt solving becomes a commodity.
The margin just vanishes.
Yeah.
Why pay $4,000 when the AI in your pocket does it for free?
It's an existential threat to their digital monetization.
And they aren't just fighting the future, they're fighting the present, the incumbents.
Right. Legacy giants like Allen and Akash have deep pockets, brand loyalty in Tier 1 cities, and they are digitizing rapidly.
Plus the global players.
Global giants like Coursera or Udemy could easily localize for Indian exams and strip away PWL's high-value students.
But there is one final risk, the ultimate wild card. Content regulation.
This is a risk they have zero control over.
Right. Imagine building a billion-dollar empire based on preparing people for one specific locked door. What happens if the government just decides to take the door off the hinges?
PWL's entire business model relies on the current format of the JEE NEAT exams.
And the government changes things. They did it in 2013 with NEAT.
Exactly. If the government moves to continuous assessment or drastically changes the syllabus, PWL's massive content library instantly becomes obsolete.
The demand just evaporates overnight.
Entirely.
So let's pull all of this together, the deep dive summary. The so what, PWL is just this fascinating contradiction.
It really is.
It's a wildly popular, high-revenue growth, digitally native company, but ironically, it's relying on expensive, heavy, physical brick-and-mortar classrooms to build a competitive moat.
All while battling historical unprofitability and a volatile stock price.
Right. They've successfully hacked customer acquisition with zero CAC.
But the true test over the next 5 years is whether they can standardize and profitize physical human education before free AI commoditizes their core digital offering.
And I want to leave you, the listener, with a final thought on that exact point. We talk about how PWL is targeting that massive 85 to 90% of the untapped Indian market, mostly in rural areas, through this incredibly capital-intensive hybrid model.
Pouring billions into real estate.
Right. But think about this. If advanced AI and 5G penetration reach those rural areas faster than PWL can profitably build physical brick-and-mortar schools, will the ultimate winner of this $10 billion ed tech market be a company that hasn't even been founded yet?
A company with no physical footprint.
Exactly. One that doesn't need to pour millions into real estate, but simply gives every student in India a flawless, free AI tutor right in their pocket.
Yeah.
Keep an eye on those offline center margins. They might just tell us the future of global education. Thank you so much for joining us on this deep dive. We'll catch you next time.